Everyone's watching gold following Trump's reelection, and investors are asking, will Trump's policies drive gold higher or push it lower? Right after the election results came out, gold actually surprisingly moved lower. With the US dollar strengthening, Treasury yields rising, and global uncertainty persisting, gold is facing some big questions. In this video, we'll break down how Trump's policies on interest rates, Treasury yields, and the US dollar might shape the future of gold prices. We'll also explore the potential impact of the ongoing conflict in the Middle East and whether a quick resolution during the Trump presidency could influence gold's trajectory. President Trump's economic playbook involves big moves on tariffs, tax cuts, and government spending, all of which have significant implications for U.S. interest rates and Treasury yields. Here's why all of that matters for gold. Gold is priced in U.S. dollars, which means that when the U.S. dollar strengthens, gold will often struggle as it becomes more expensive for international buyers. Right now, U.S. Treasury yields are climbing, breaking above 4%, rising to its highest level since July on a 10-year basis. And this surge in yields makes the U.S. dollar more attractive. Why? Higher Treasury yields suggest that investors expect inflation and stronger economic performance, and that could push the U.S. dollar even higher. With Trump back in the White House and Republicans controlling both the Senate and likely the House, his policies can pass through Congress with ease. That means we can get faster enactment of his agenda, which is expected to include significant fiscal spending and new tariffs. If this drives up inflation expectations, the Fed might consider keeping interest rates elevated and slow interest rate cuts, and possibly lead to further strengthening in the US dollar and putting downward pressure on gold. Now let's focus on how Treasury yields and the dollar strength specifically impact gold. When Treasury yields rise, they offer investors a solid, risk-free return, which often makes gold, an asset that competes with the dollar for investment and doesn't pay any interest, less attractive. Rising yields also drive up demand for the US dollar as global investors buy US assets for their higher returns, which in turn boosts the dollar's value against other currencies. The strength of the dollar directly influences gold prices. When the dollar goes up, gold becomes more expensive in other currencies, typically leading to a drop in demand. We saw this dynamic play out shortly after Trump's reelection. As Treasury yields rose, the dollar surged, and gold prices dipped by almost 3%. However, there's another layer to consider. Trump's fiscal policies, especially if they lead to higher inflation, could ultimately make gold an attractive hedge for some investors. Inflation expectations tend to push up demand for gold as a safe haven asset. And if inflation becomes a significant factor, a serious risk, it could provide support for gold in the longer term. Beyond the U.S. economy, there's also the question of geopolitical tensions, especially in the Middle East and with Russia and Ukraine. Trump's re-election could impact the situation in several ways. Gold typically benefits from global uncertainty, and right now the ongoing Middle East conflict is a major driver of safe haven demand for gold. If tensions remain unresolved, we could see upward pressure on gold as investors seek assets that retain value in volatile conditions. However, if Trump pursues a quick resolution or a more interventionist stance, it could bring more stability in the region faster than expected, even if there's some initial pain. A quick resolution in the Middle East could likely reduce safe haven demand for gold, especially if it coincides with the rising U.S. interest rates and a stronger dollar. In other words, gold's future partly hinges on whether we see peace or prolonged tension in the Middle East. Investors will be watching closely to see how Trump handles this conflict, as his actions could shift the demand for safe haven assets like gold. To sum it up, Trump's re-election could create a challenging environment for gold, especially if the dollar continues to strengthen and Treasury yields rise further. We did not have a contested election, so there was no uncertainty to drive gold prices higher. The combination of higher yields and a strong dollar and potential stability in the Middle East could drive gold prices lower. But on the other hand, if Trump's policies drive inflation expectations higher, gold might see renewed demand as inflation hedge, but that would probably take longer to come to fruition. Plus, if the Middle East conflict remains unresolved, ongoing global uncertainty could support gold as prices as a safe haven. So there's a lot to be watching. Anyway, if you're looking to make most of these insights and turn them into trading opportunities, check out our favorite prop firms, brokers, and trading courses in the description below. And don't forget to like and subscribe to our channel for more videos like this and how some of the political and global events are shaping the markets and how they could affect, how these instruments, especially gold, could trade in the coming months. The most important thing to remember is that at the end of the day, it is monetary policy that the market cares about the most. Inflation has a direct effect on monetary policy, but everything is data dependent, like the Federal Reserve says. So I'll try to keep you all updated. Make sure you subscribe to the channel. I will see you all in the markets next time.